Hello, everyone. It is my pleasure to have Chris Vermeulen, one of the best traders in the market that I know, and a founder and chief market strategist at the technicaltraders.com on our channel today once again. So thank you very much for your time today, and it's always great to see you, Chris.
Yeah, always a pleasure. Thanks for having me.
Now, it seems like you nailed it when you said on the previous interviews that we had last year that you see the market heading for a new all-time high. And as we all know, all three indexes have made several new all-time highs this year and actually has been going higher for quite some time now. Now, the question that I think most investors would have is this the start of a true bull rally that will last for another decade? Or is it a rally that is pulling in a lot of investors into the market that will be followed by a major market crash very soon? So can you
Mhm.
share your perspective of the rally that we are seeing in the market these days?
We are in a bull market more or less right now. I wouldn't say it's a raging bull market. Small cap stocks, penny stocks are not, skyrocketing. They're completely dormant and underperforming, which we can see in the Russell 2000. It's really not making new highs. If you actually look at like the Russell 2000 and equal weighted the stock market in general, we're actually really just putting in a double top. The majority of stocks are not doing that well, but we are seeing the major indexes, which are tech, specifically tech heavy, like the SP 500 and NASDAQ, making it look and feel like we are in a bull market. And it really is a small handful of stocks doing most of the heavy lifting. But I believe we're starting to see more and more distribution selling days. We had one last week. That is when we see a high volume day with lots of selling across almost every kind of asset and mostly specific all sectors of stocks. And we were seeing more and more of those. And this is what I think you and I talked about months ago. I said, I'd love to see the SP 500 hit new highs. And then I want to start looking for these distribution days. That's big, smart money unloading their portfolios kind of in clumps. Every week or every couple of weeks, we see one of these distribution days where big investors are unloading, billions of dollars into the market, into the hands of the average investor. The stats were out last week saying that last week was the record breaking money flows into technology ETFs and funds. And Bank of America is saying that they believe like we've hit this AI bubble where it's about to burst. And so the general public is just piling into technology. Most other stocks are struggling. The masses, everybody I know is buying Nvidia, and they're all talking AI and they're buying it on their phone. They've never even bought stocks before. When it's like this, generally all the savvy investors, if they're in, they're already in. And right now it's just the market pulling the rest of the investors who have the ultimate FOMO, feeling like they're missing out on the next big movement in the market, like AI, and they feel like everybody's making money but them. Those are the people getting sucked in, and typically they get sucked in right near the top. I do believe the markets have some more room to go, a few more weeks of potentially higher pricing. We're long the markets still. I'm expecting this, but overall, this is not a new bull market. This is a topping phase. Most sectors are struggling, and most of them are down fairly significantly. And there's a lot of different warning signs out there saying, from an economy standpoint, the economics are starting to show we're starting to turn a corner in terms of recession coming, unemployment's going up, all kinds of things are happening there in the background. But it takes a long time for a recession, an official recession. We've already started, it's just very early stages.
So I think when you share your graph, it's more helpful for my subscribers to see, what phase we're in. But can you kind of share your graph and share your thoughts on where we might be in that market cycle?
From a really basic level, we are like the stock market and the economy goes through these cycles. We are pretty much in this top red zone right now, maximum risk. But when we go and we look at the stages that you just mentioned, there's four stages of the stock market. We're in this topping stage. Even though we have the SP 500, the NASDAQ hitting new all time highs, the reality is this topping phase where the market blows off, everybody piled in 2021, and then we've seen small cap stocks struggle. This pattern here is actually what most stocks are doing. If you were to equal weight the SP 500 and add in the Russell 2000, you pretty much have this pattern more or less coming up to a double top. Most sectors are struggling. And after this, we go into this big stage 4 decline, which is a financial reset. It's like the tech bubble. It's like the financial crisis 2008. And we are in this complacency stage. The market thinks it cooled off in 2022. And now people are thinking that this is the start of the new major bull market is just getting going. And the majority of people are in this complacency mode, buying stocks, thinking, hey, This is it. Next 5, 10 years is going to be another bull market. I want to be part of it. But eventually this is going to roll over and then they're going to have anxiety and denial. They're not going to believe another bear market starting. They just got invested. We go through this whole phase. So, I think things are going to get pretty ugly. This is a major cycle. It takes a long time to go. So many people are going to have the rug pulled out from underneath them because they just don't understand all these layers and these cycles involved. But yeah, there's a lot of these interesting things going on. Like, the Russell 2000 is a good visual here. If I was to just zoom out, we can see the kind of big picture here of we saw the stock market go up and then it sold off. And this is what the majority of stocks are doing. They're in this complacency phase that I just talked to you. People thought, oh, the market's just cooled down and now we're going off to the races. The reality is this is a giant bear flag and we're going to see this market sell off in, I think, a very big way and wipe a lot of people out. It always does. You can only inform so many people and only so many people will take action. This is a very exciting but nerve-wracking time for a lot of people because if you know what you're doing, to me, this is very exciting. To a lot of people, they're nervous, but they don't want to miss out on the rally. So they buy in and they're buying near the highs, in my opinion.
Now, I know back in the dot-com bubble, there were a lot of companies without any revenue or income. Just because they had the dot-com in the title of their company, we saw the stock prices skyrocketing, ending up in a bubble. Now, does the AI hype and the crazy rise of Nvidia and other semiconductor companies like SMCI or ARM feel like the meltdown we had before in the dot-com bubble? Or since we actually have great earnings that are backing up the price of the stocks, do you think there is still more room for these stocks to go even higher?
Yeah, I do. I'm just trying to see if I have a chart for that. There's a very interesting chart that shows the comparison of where we are with the tech bubble. I don't have it here on this computer, but more or less back in the tech bubble, about 34% of the SP 500 weighting was tech. And of course, it was a parabolic move. Everything with the .com went skyrocketing, but they were really worthless companies. They were way ahead of their time. Everybody piled in, chased the prices up. Nobody made any money. This time is different. Technology has been grinding its way up. It's back up to those lofty levels from the tech bubble, but they actually make lots of money. In fact, they make way more money than most, brick and mortar homes or businesses now. So it's interesting that I feel like we're at a major stock market top and we have technology being, 34% weighting of the SP 500 again, just like in the tech bubble. But it is a different story. Technology is more valuable than almost everything else. So it does carry a lot of value, but the PE ratios are still way out of whack, in terms of the norm. And so there's room for them to have a big correction, a big pullback in value.
I know that there is a lot of money on the side. So I heard that I think there's like over $6 trillion in maybe bonds or out of the market and are on the sideline.
Mm-hmm.
But do you think that this money has to come into the market before we see that major market crash? And if that's the case, if the 6 trillion or, some portion of that money has to come into the market, I assume that you might be anticipating that the market will go higher before we experience that drastic crash, I guess.
Yeah, it's tough to say. I mean, there's so much money out there. I don't think it has to come into the market. Maybe it does. Maybe we have a big blow off phase. Maybe the stock market starts screaming higher. This is where, I really step apart from everyone else. So I don't really try to predict or pick a top. I share what I think is going to happen, but it has no weighting whatsoever in my trading. For example, I have been bearish really since the market started to go down. I'm bearish all the time. I feel like the market is getting closer and closer to this major, decade-long bull market coming to an end, or longer than that. But we're long the markets. I don't trade what I think and feel, and that's what most people do. They wait for the Fed and they trade based on the Fed. They think all kinds of stuff and they play their emotions and what they think is going to happen because they don't feel safe or they're shorting the markets right now. The key to success is to follow trends. And that's how we make money. It's not about trying to outsmart the market. You're never going to outsmart it. You might do it occasionally and think you're, superhero, but that was a fluke. You'll lose more times than not. So I don't know what's going to happen with the 6 trillion on the side. I don't really care. And I don't really care if this market keeps going up or if we go into I'd much rather actually have this big financial reset because it's going to reset real estate. It's going to reset currencies. It's going to reset commodities and stocks and opportunities. Not only can we profit from the fall, but then we can reinvest our increased wealth into a fresh bull market cycle that could last another 5 or 10 plus years and make, a lot more growth. So I like the correction because it gives us an opportunity. We can build up capital. And during a recession and a bear market, all kinds of deals pop up: real estate, businesses, equipment, you name it. There's a million things that instantly, if you have lots of money and you've saved and protected your capital, it's like a kid in a candy store for an investor. You're like, what do I want to buy? You just want to go and buy all kinds of stuff because everything's undervalued at some point, and it's going to generate great returns, and you can diversify and all that stuff. So I don't think the 6 trillion needs to go in. I feel like we're getting close. I don't know how much, to be honest. I don't know how far $6 trillion would move the market. I don't really follow any of that stuff or know those details. I just follow the strength of the market, the momentum, follow the trend, and I just manage positions from there.
All right. So finally, I just had a last question is, how are you preparing yourself right now? So I know that you follow the trend. So I assume that you would be in the market at this point, but I just want to hear if you are actually in the market or if you're just holding money into like the BIL, or I guess you're not, but if you're even shorting or starting to think of shorting the market as well.
Yeah, we won't be shorting anytime soon. We need a stage four. Pretty much the market probably has to fall 15 or 20% from where it is right now, and potentially further before we actually click into a stage four. So a lot of damage has to be done. And while the market falls in that direction, we'll be trading different assets to profit from that. But we don't buy any inverse ETF until we are in a stage four decline. I mean, as we start getting into inverse ETFs, it's been a bloodbath for a long time. People are suffering, businesses are going bankrupt. And that's when we start actually buying inverse ETFs. In terms of the market right now, we're long the NASDAQ. We hit our first target a week or so ago. We're also long the SP 500 with the SPY. We hit a target with that last week. And so right now we're 50% of our portfolio in the stock market. 50% of our portfolio is now in cash and BIL, just collecting daily interest and monthly dividend payment. And that's how we're sitting. We're sitting pretty. If this market keeps ripping higher, we're going to benefit. If it stalls out and rolls over, we have our stop at our entry price for the balance of our positions. So either way, we close it out. It'll be a nice winning trade. Plus, we're collecting cash. Both QQQ and SPY paid out a nice dividend today. So we're also getting a nice dividend payment from those ETFs as well. So yeah, we're long the markets with half of our portfolio, and just hanging tight.
Thank you for sharing that. I think we went through a lot of great insights here, so I'm pretty sure it helped a lot of our subscribers. But
Great.
Chris, again, I want to thank you very much for your time and all your great insights. And I always learn so much from your interviews. So thank you very much. And I'm looking forward to having another great interview by maybe the end of the year to see how the market plays out.
Yep. Sounds great. Appreciate it.
All right. Thank you.
All right. Take care.